Hello and welcome to the World Battery Metals and Mining News for the 18th of July, 2024. Panama vows to talk to First Quantum in coming months on shuttered mine. Panama's government will engage with First Quantum Minerals Limited to address the environmental impact of the company's shuttered copper mine, with discussions set to take place in the coming months. The newly inaugurated President Jose Raul Mulino has indicated that the mine may need a temporary reopening to facilitate responsible preparation for its permanent closure. This follows a ruling by Panama's Supreme Court deeming the mine's operating contract unconstitutional, which led to its abrupt closure last year. The government has prioritized other issues, including water supply in the Panama Canal, social security reforms, and fiscal deficit control, while also focusing on retaining the country's investment-grade credit rating. Despite the mine shutdown, Panama's economy grew by approximately 3% in the first half of this year. By Michael McDonald and Jacob Lorink. Nornickel weighs projects in new top market. China, Russia's largest miner, MMC Norilsk Nickel PJSC, is exploring new copper, nickel, and palladium projects in China due to increasing difficulties with cross-border payments and shipments amid sanctions. Nornickel executives recently had discussions with potential Chinese partners, leading to around 10 memorandums of understanding. Although Nornickel hasn't been sanctioned directly by the US or the EU, its operations have been impacted by broader restrictions since Russia's 2022 invasion of Ukraine, with the London Metal Exchange banning new deliveries of Russian metal. With most European and US banks halting funding for Russian metal deals and some clients ceasing trade, China has become Nornickel's main export market since 2023, making up over half its sales. However, trading with China has also become more challenging due to the US expanding its sanctions criteria, causing Chinese banks to be more cautious with Russian transactions. Nornickel has already announced a planned copper plant and joint venture in China, expected to be completed by mid-2027. Recent talks also considered a nickel plant for battery producers, amid other projects. Nornickel's spokesperson declined to comment. Foran upsizes placement to $263 million for Saskatchewan projects. Foran Mining has increased its previously announced private placements to $360 million $263 million USD, with the proceeds aimed at advancing its Saskatchewan projects, particularly the McIlvenna Bay Copper and Big Stone Copper Zinc projects. The company revised its agreement with 8 Capital, BMO Capital Markets, and National Bank Financial to raise approximately $260.9 million CAD through the sale of common and flow-through shares. Additionally, Foran plans to amend its subscription agreement with Agnico Eagle Mines, allowing Agnico to acquire more shares and maintain its 9.9% stake in the company. The larger share offerings, representing over 25% of the current issued shares, will require approvals from shareholders and the Toronto Stock Exchange. The McIlvenna Bay project, situated 375 kilometers northeast of Saskatoon, has a feasibility study outlining a substantial resource estimate and includes both copper and zinc concentrates. The nearby Big Stone project also holds significant copper and zinc resources, contributing further to Foran's portfolio. U.S. has second longest mine development timeline in the world, S&P Global says. A new report by S&P Global reveals that the United States has the second longest lead times worldwide for developing new mines, averaging 29 years from discovery to production, only surpassed by Zambia at 34 years. Despite its considerable resource base, including significant reserves of copper and lithium, the U.S. receives less mining exploration investment compared to nations like Australia and Canada. Over the past 15 years, investments in Australia and Canada have been 57% and 81% higher than in the U.S., respectively. The report, which analyzed 268 mines globally, highlighted that only 3 mines have commenced production in the U.S. since 2002. With several others remaining in prolonged development stages. Factors contributing to these delays include high litigation rates against mining projects and opposition from indigenous and environmental groups. Notably, gold mines develop the fastest globally at an average of 15.2 years, while nickel mines took the longest at 17.5 years. Blank check firm to buy Turkish mine in $290 million bet on copper demand. ACG Acquisition is purchasing a Turkish copper and zinc mine from Kalik Holdings subsidiary for $290 million, with production slated to begin in 2026. The deal aims to capitalize on rising copper demand driven by the energy transition and includes $145 million for expanding the mine to produce up to 25,000 metric tons of copper equivalent annually. This move initiates ACG's global copper consolidation strategy as the company continues to explore additional targets. The financing includes $135 million from a mining private equity fund, up to $25 million from metals trader Traxys, and $60 million from ACG's co-sponsors and a European family office. ACG anticipates finalizing the acquisition by August 31st. Copper output from Codelco this year to top 2023, chairman says. Codelco's chairman, Maximo Pacheco, announced that the state-run copper giant anticipates an increase in production for 2024, with a significant recovery expected in the second half of the year despite currently being behind target. Factors contributing to this optimistic outlook include the completion of maintenance work, new projects coming online, a strong budget, and fewer anticipated weather disruptions. Additionally, Codelco's efforts to venture into the lithium market are progressing well, with numerous companies showing interest in partnering for a major project in the Maricunga Salt Flat. Pacheco shared these updates at a recent event, highlighting his belief that the latter half of the year would mark the beginning of the company's recovery. China copper smelters eye more output cuts as raw material supply tightens. China's copper smelters are cutting output due to a severe shortage of copper concentrate, with further cuts expected next year as raw material supplies tighten. Major closures, including First Quantum's Panama Cobre mine, have strained supply lines, impacting both small and large smelters. Research firm CRU predicts a significant shortfall in copper concentrate by 2025, leading to widespread capacity reductions and project delays. While large smelters with pre-negotiated contracts are less affected, smaller producers face pressure from falling spot treatment and refining charges, TCRCs. Despite these challenges, China's refined copper output still rose by 7% in the first half of the year. Anglo's sale of De Beers hindered by diamond market state. Anglo American is contemplating further cuts to its diamond production at De Beers amid ongoing market challenges and weak demand, particularly from China. This consideration comes as the company restructures its business following a successful defense against a $49 billion takeover bid from BHP, aiming to focus on copper, iron ore, and the Woodsmith fertilizer project. While it maintains its current diamond production target of 26 to 29 million carats for the year, options to reduce output further are being actively explored. This move aims to manage working capital and preserve cash, as the company faces low consumer demand, competition from lab-made gems, and inflation. Additionally, Anglo American aims to streamline its operations within the next 18 months, while preparing to potentially sell its 85% stake in De Beers. Zimbabwe's Kuvimba signs $310 million lithium mine deal. Zimbabwe's state-owned Kuvimba Mining House has signed a $310 million deal with a consortium of British and Chinese investors to construct a lithium concentrator at Kuvimba's Sandawana mine. The agreement, structured as a build, operate, and transfer (BOT) deal, involves the creation of a 3 million metric ton per year ore processing plant, with the plant set to be commissioned within 18 months and produce 600,000 metric tons of lithium concentrate annually. This initiative follows a trend of significant foreign investment in Zimbabwe's lithium sector, which has seen over $1 billion invested, mostly by Chinese firms, since 2021. Zimbabwe currently exports lithium concentrates to China for further processing, as the country does not have the capability to refine lithium domestically. Mexico has sufficient arguments to win Ganfeng dispute, says President-elect. Mexico's President-elect Claudia Sheinbaum stated her confidence in resolving the legal dispute with Chinese miner Ganfeng, committing to uphold the current government's stance that lithium belongs to Mexicans. The dispute, initially brought to the World Bank's Dispute Settlement Center by Ganfeng in June, concerns a mining concession in Sonora. Sheinbaum, an ally of resource nationalist President Andrés Manuel López Obrador, emphasized that the government had ample legal arguments, citing Ganfeng's failure to operate in the area as required. López Obrador had previously affirmed a focus on negotiating while defending national interests, aligning with Mexico's broader lithium nationalization efforts. Mercedes, Stellantis in talks to back Serbia's lithium plans. Mercedes-Benz Group AG and Stellantis NV are in negotiations with the Serbian government to invest in lithium processing and electric vehicle (EV) battery production, potentially supporting what could become Europe's largest lithium mine. This follows Rio Tinto Group's proposed $2 billion investment in the Jadar lithium mine in Serbia, which was halted 2 years ago due to mass protests. The discussions aim to develop a broader lithium industry within Serbia, ensuring value capture from natural resources, and could significantly boost the European Union's efforts to secure raw materials for the energy transition. Serbia is set to sign a framework agreement with the EU on mineral raw materials, potentially facilitating the production of both materials and EVs in the country. This comes as European battery projects face delays amidst faltering EV demand and ongoing dependence on China for raw materials and processing. German Chancellor defends planned lithium deal with Serbia. German Chancellor Olaf Scholz defended a planned lithium mining deal with Serbia, emphasizing that the project will not negatively impact the region's environment. Scholz argued that Europe must diversify its mineral sourcing and cannot rely solely on a few countries, particularly in the East. He made these statements at a European political community meeting in the UK before flying to Belgrade to meet Serbian President Aleksandar Vučić. Together with executives from Mercedes-Benz and Stellantis, they plan to sign agreements aimed at developing Serbia's lithium processing and EV battery industry, potentially supporting the establishment of Europe's largest lithium mine. The initiative follows discussions to revive Rio Tinto Group's $2.4 billion mine proposal, which was previously halted due to ecological concerns. Australia's Quantum Graphite receives $300 million loan offer from US Exim Bank. Australian miner Quantum Graphite announced it has received a term sheet for a potential loan of up to $300 million from the U.S. Export-Import Exim Bank to fund its Util project near the North Atlantic Ocean. While the Exim Bank has not made a binding offer, if the loan is approved, it will support the end supply chain for refined flake graphite production destined for the U.S. East Coast. The Util project aims to produce up to 100,000 metric tons of high-grade graphite annually and includes mining activities at the Yuli mine in Australia. UK gold coin sales jump on concerns over Labour's fiscal plans. Sales of tax-exempt gold coins from the UK's Royal Mint surged by 9% in the last quarter compared to the same period last year, amid investor concerns over potential fiscal policy changes by a prospective Labour government. The Mint witnessed its largest single purchase of CGT-exempt coins in May, signaling a shift in preference from gold bars to coins, with 2/3 of money spent now favoring coins. This increase is driven by fears of a capital gains tax hike, reductions in tax thresholds, a bullish outlook on gold prices, and rising geopolitical uncertainties. Notably, another dealer, Marion Gold, reported a near tripling of sales for similar coins, reflecting heightened interest and customer inquiries about capital gains tax implications. Centamin boosts Doropo gold project economics in Côte d'Ivoire. Centamin has announced the results of a definitive feasibility study (DFS) for the Doropo gold project in Côte d'Ivoire, highlighting a commercially viable mine with strong economic indicators. The project boasts a post-tax net present value of $426 million, a 34% internal rate of return, and a 2.1-year payback period, meeting the company's investment criteria, with production forecasts exceeding 200,000 ounces per annum for the first 5 years and an all-in sustaining cost AISC below $1,000 aughts. Over its 10-year life, The Doropo project is expected to produce 167,000 ounces annually at an AISC of 1,047 oz, supported by 1.88 million ounces of probable mineral reserves. The DFS indicates significantly lower execution risk and reduced social impact, cutting community resettlements from the estimated 2,000 to 3,000 persons to less than 500. Centamin received an environmental permit last month and plans to submit its mining license application in Q3 2024, with a final investment decision to follow if the license is awarded. Doropo would be Centamin's second producing asset after the Sukari mine in Egypt. Swiss June gold exports fall to the lowest in more than 2 years. Swiss gold exports in June dropped to their lowest levels since April 2022, largely due to decreased shipments to major consumer markets, China and India, according to customs data. Switzerland, the world's leading bullion refining and transit hub, experienced a significant month-on-month drop in gold exports to China, India, and Turkey, attributed to the nearly 20% rise in spot gold prices this year. Conversely, gold deliveries to Hong Kong saw an increase. This trend aligns with gold prices reaching a record high of $2,483.60 per ounce on Wednesday. USGS releases first study to assess global earthquake risk to mineral supplies. Scientists at the United States Geological Survey, USGS, have created a new methodology to gauge the risk to global mineral commodity supplies like copper and rhenium from seismic activity. This framework, developed through comprehensive research, assesses the impact of earthquakes on mining, smelting, and refining processes, particularly in highly seismic regions such as South America, East Asia, and the Pacific. The USGS highlighted that the study offers the first systematic quantification of these risks, suggesting that earthquakes could significantly disrupt supply chains and the global economy. This new tool can be applied to other minerals, aiding governments, companies, and insurers in strategic decision-making.